Still on the third part, specific data to look for when analyzing major economies, and it is time to take a look at the AIG Construction Index. Now we've had the AIG manufacturing in Australia. In Australia we had the AIG Services Index. It is time to take a look at the construction industry in Australia, and we'll analyze this industry looking at the AIG Construction Index. Now this index is not to be found in any other economies except the UK, and that may be connected with the similarities between the UK and Australian economies. The AIG Construction Index is looked upon in Australia, and this is different from Europe, like mentioned, and US. The only country out of the 5 areas that we are analyzing that is looking at the construction index is UK. It is still a survey based on managers from the construction industry responding questions about the current level of business activity, inventories, new orders, employment, so on and so forth. Based on the responses, the index shows values interpreted regarding the 50 level. If the values are higher than the 50 level, then the industry is considered to be in expansionary mode, and just the opposite is true as well. If the values are lower than the 50 level, then the industry is considered to be in contraction or in recession, and this should be treated as such. These indicators that have such a line in the sand interpretation, like all these PMIs are, they are easy to interpret and visualize, and by looking at the past date, like we are doing for the past 6 months, and trying to identify a trend, one can have an educated guess about the level of that specific industry, in this case the construction industry. The AIG Construction Index is released monthly on the 5th business day after the month ends, 23:30 GMT during the Asian session. It is a level of a diffusion index based on surveying managers in the construction sector. The result is compared with the 50 level, higher than the 50 signals industry expansion, lower than the 50 signals industry contraction. It is a second tier data. However, markets are being highly influenced by it if the actual comes different than the forecast in a big way. It is a survey of about 120 construction companies, so you can imagine that the result of this survey actually is important for the industry, for the construction industry as a whole. The release date again is monthly on the 5th business day after the month ends, and the release time is 23:30 GMT during the Asian session. If the actual comes in higher than the forecast or bigger than the forecast, this should be interpreted as positive for currency, and if the actual comes in lower than the forecast, it should be viewed as negative for the currency. If you are trading binary options here with us at binaryoptions.net.au, and you are thinking of buying calls in order to have a winning trade when you buy call, you are looking for price at the expiration date to be higher than the strike price you bought the option for, and therefore you are looking at such a release, and if the actual is higher than the forecast, then you should buy calls for, I don't know, short to very short term, buying 60-second options or one-touch options or short-term expiring options. And if you are looking for price to go to the downside, if the actual is lower than the forecast, it should be interpreted negative for currency. And if you have your asset being formed out of the Australian dollar and US dollar, for example, as the currency pair, then you are looking for the Australian dollar, US dollar to move to the downside, and that implies that you should buy puts because of the expiration date. The value of the the price should be lower than the strike price you bought the option for. Looking at the past 6 months worth of data, and remember what this index means, going back here, what this index means, values higher than 50 signal industry expansion and values lower than 50 signal industry contraction. And what you are seeing here on our 6 month worth of data, you are seeing an industry that it is contracting since, for the whole period, for the whole analyzed period, for this whole 6 months, this index is in recessionary territory. Now, this is once again coming to justify the Reserve Bank of Australia for cutting the interest rates, because if you look at our project, the AIG PMI manufacturing, the AIG services index, the AIG construction index, they are all into the recessionary territory, and there is no surprise that the Reserve Bank of Australia cut the interest rates from the Australian dollar at the historical minimum level, even though those are quite high compared with other interest levels from other major economies. Next, we will take a look at, let's say, a second tier indicator called home loans. And the housing industry is important for any economy in the world, not only for the one in the United States where the financial crisis originated, but from all the economies in the world. And the Australian economy should not be different than that. And we'll take a look at this housing data. But that would come with the next recording. Until then, let's make a short recap on the AIG construction index. The release date is monthly on the 5th business day after the month ends. The release time is 23:30 GMT during the Asian session, and if actual is higher than the forecast, then this should be viewed as positive for the currency, buy calls, and if the actual is lower than the forecast, then this should be viewed as negative for the currency, so buy puts. Let's move on with home loans.